This is a website that you need to check out, insidertracking.com. You can go through here. You can sign up for a free account if you're interested, but you don't have to get some of the information. And you can see the insider filings, what they're doing, which companies are selling, how much it's worth, and so on. All that information is available to you through this website, and I definitely want to give some respect to them. And they've done some great work here. Insidertracking.com. You also need to check out two websites that I've mentioned before, one being Whale Wisdom. Another is Holdings Channel. Whale Wisdom and Holdings Channel are two websites, I talk about it very often, where you can see the different companies, central banks, and other things that have been buying and selling, and they bring their SEC documents, the 13F, that's their filings, what they have to publicly claim, whether they're buying, they're selling, and how many shares, which companies, and so on. And they bring that to the public through these 13F SEC filings. You can go on Whale Wisdom and Holdings Channel and see exactly what the companies are. Like Berkshire Hathaway, you'll know when they sell. You'll know when they buy. And all of that information is made public. So I definitely think that it is, you must. If you want to be investigating this, you need to be proactive. Check it out. I do regularly bring up that information, but don't rely on me. You definitely want to do that for yourself. Aggregate value of FANG insider selling through the first half of the year. So this is taking that information from Insider Insights and just putting it out on a graph. This is Bloomberg. And you can see that the projected value throughout 2018 is absolutely massive. We're looking at $5 billion. Wouldn't surprise me to see it going even further than that, especially if we have a downturn that begins throughout 2018, later this year. My concerns right now, let me hold off on that. My concerns, just one sec. I want to finish off. Smart Money Flow Index. Smart money is bailing at rates not seen since the last recession. And guess when we saw these levels right here. So we see where we are today, minus 15 on this particular index. We saw that during the financial crisis. And guess what? We saw that during the dot-com boom and bust. Big issues we have today. Smart money flowing out, retail, minnows flowing in. I don't know. Could this number could go way down, and we could have the Dow Jones moving way up, and we could have an anomaly that exists. Absolutely. But we're only going to know looking back in the pages of history. We never can tell what's going to happen. There's no way to know, but I'm going to give you some pointers. Just one second. The 50 stocks representing the largest short positions. This is the pricing as of May 15th, but the short interests are as of April 30th, all right? And we're looking at the big names. I've talked to you about this before, whether it is AT&T, Intel, Walmart, Nvidia, Walt Disney, and so on. There are a bunch of big names on here like ExxonMobil, which I'm actually surprised that this is still on here, considering we've seen oil come up quite a bit since its low point. And, there are other big names on here, but I'm not seeing any of the FANG stocks. That's interesting. No, of course not. All right. Now, very quickly, we have the Federal Reserve that just increased interest rates. We have Japan that said they're going to continue to taper. They've been tapering at a very, very small amount. We have the ECB saying, okay, we're going to end our bond buying program. Okay, so we have all of this happening. We have a concern LIBOR is going to be increasing as well. We got this whole thing adding up when we have the biggest deficits ever that are occurring consistently. We have an issue because we've been relying on the stimulus, and it's not going to be able to really give us any good, good things for the future when we've been relying on it and they're pulling it out. Big problems ahead. There is no doubt about that. Retail investors cannot save the market. Only the central banks can. If they pull out the stimulus, the liquidity, that will collapse the market. The market can continue on. If they're willing to hyperinflate the currency, this stock market can go to highs it has never seen before. But it's all resting on the shoulders of the central bankers. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that very much. And if you want the financial education you were not taught in school, You went through so many years and you didn't learn a single thing about financial education, how to prepare for yourself, what to do with your money, how the money system works. What I did was I took everything I learned over the years, books, seminars, listening to audiobooks, reading, everything, speaking to people in the industry, speaking to people outside of the industry as well, trying to figure it all out. I condensed that down into 2 books. And so this information here will give you so much knowledge that even those who you go to the bank and ask for help, they don't even know. And I assure you about that. Put it into these 2 books. I hope that you'll find it interesting. I hope that you'll find it informative, as so many people tell me every day that they'd have, and I'm so grateful to all those people. If you want the audiobook version instead, I've noticed many people are buying that. You can take a look here at themoneygps.com. Take care.